Next is session 5. What is the role of the business community going forward? After this session, we'll have a short 20-minute break. Now we'll go to our chair, Gary Rieschel, who is moderating with speakers Myron Brilliant, Howard Chen, and Jim McGregor. Jim, by the way, flew from China to the U.S. for the last conference that we hosted in person in 2020, and he's been in the U.S. since 2 years later. Thank you all for being with us. Gary.
It's been a great day. I always think you can't possibly learn after you hear the same people talk time and time again, but that's clearly not true given the conversations we've already had this morning. So what's the role of business and corporations in U.S. China relationships? We have a very distinguished panel to talk about that. I have precious little hope of actually monitoring these folks. Every single one of these folks is used to being a panel moderator, so I'm not going to hold up much hope for being getting much control over this. So I'll say a few things at the beginning. To introduce the panelists, Myron Brilliant, Executive Vice President, Head of International Affairs at the U.S. Chamber. He's a senior advisor to literally thousands of U.S. companies and oversees a group of 80 regional and industry experts focused on that subject. So welcome, Myron. Howard Chen, co-chair of the China practice at Greenberg, Traurig, which is a major international law firm. Howard's known as one of the world's experts on intellectual property, both strategy and litigation. And also they're a major sponsor of this event. So thank you very much, Howard. And Jim McGregor, he may have flown back from China for this event a couple years ago, but he's been a popsicle ever since because he's living in Duluth, Minnesota. So I would defy anyone to say they've been in colder climes than Jim the last couple months. Now he's the head of APCO Asia, author of highly regarded books, has been involved in the chamber, AmCham functions for years, was a reporter at the Wall Street Journal and head of Dow Jones in China. So that's the group we have for today, and it's a real pleasure to welcome you all. What I'll do is I'll make a couple comments. Margaret opened the event with the quote from George Shultz on trust being the coin of the realm. And I think that's really critical because if you don't have engagement, you don't have trust. And so the idea that somehow we're going to have a relationship, a decoupled relationship that doesn't involve intense engagement on matters of importance, and yet we're somehow going to come to the place we trust each other is just a fallacy. So that's not going to happen. I think that U.S. business, what's interesting is the policy folks in D.C., just like their counterparts in Beijing, think that they have the answers. And I would submit to you that the U.S. business community has thousands of more interactions with their Chinese counterparts than the U.S. government does. And yet I have seen the U.S. government so reluctant to reach out to the business community, not in a lobbying format, but in a help us understand what the reality is on the ground format for your companies, for your competitors, and so on. And I think it's absolutely critical that we start to include business in how to frame U.S. strategy and policy. I think that's been a real shortcoming in how the U.S. has approached U.S.-China relations. At the same time, it's interesting that China is actively soliciting the support of the U.S. business community for its policies, asking the U.S. business community to lobby the U.S. government to relax some of the more strenuous elements of the U.S.-China trade war, if you want to call it that. We also see far more political pressure now from the U.S. government on many U.S. firms regarding their business in China. There's newfound focus on the investment in China. There's focus on the support, sponsorship of activities like the Winter Olympics in Beijing. And so I think that it's important, again, the U.S. business community, global business community really sits at the center of a great deal of this interaction, and we need to take far more advantage of that than we have in the past. The scale of U.S. business in China is vastly greater than that of China's in the U.S. I've heard different numbers, but numbers between $500 and $700 billion a year that U.S. firms conduct in China. It's not trade. The U.S. firms have been far more successful than their foreign counterparts in localizing their business in China. And I think when you look at Chinese firms coming to the U.S., it's really from a trade perspective that business has occurred. Very few Chinese firms have meaningful business that would be even close to the size of their domestic business in China. They don't have that scale of business in the United States. And that's not true for a good number of U.S. firms. So there's clearly been a great deal of learning. There's been a great deal of investment and understanding of, how do you do business in China? And again, I think we need to take far more time to really understand the success and the implications of policy on that relationship. So now let's turn to our panelists. I have a couple questions to frame things, but as I said, this will likely spin out of control relatively quickly into all sorts of entertaining tangents, which is really why you're all listening. And so we're going to start with Myron. And one of the things that we're talking about today is we tend to think that there's a common point of view among the business community about China. And when you're looking at the U.S. firms doing business, is there a common point of view? Or when you look at your constituents, are you literally talking about hundreds of points of view that you're having to somehow synthesize into advisory work, consulting work, and so on?
Well, Gary, first off, it's a pleasure to be with Howard and Jim and you on this panel. And a lot's been said in the course of the summit so far. Let me just say that last night I had Ambassador Burns before a number of CEOs. And by the way, Ambassador Burns is looking forward to his venture in China. He'll spend 28 days, the first 28 days in quarantine in China, but he's looking forward to it. But what I would say to all of you is that one of the things that he said is there's a lot of paradoxes and contradictions in the U.S. China relationship. And there's a lot of paradoxes and contradictions in the way the business community looks at the U.S. China relationship. So first off, it depends where you sit. If you sit in Beijing or Shanghai, if you're operating a manufacturing plant, if you sit in Duluth, Minnesota, if there are any CEOs sitting there, or you sit in Washington, your perspective is going to be a little different. Having sat in Washington, but listened to the CEOs on this call who have major operations in China, again, a lot depends on which sector of the economy you're in, what kinds of issues you see coming out of the policy-making apparatus of Beijing as well as Washington. If you're in the semiconductor industry, you're very worried about export controls. If you're in the financial industry, you see changes going on in China that may be actually beneficial, and you're getting more opportunities there. So there are different views coming out of the business community. There is a couple overall arching themes that I see in my work dealing with a lot of companies. First is that we don't have clarity. The lack of clarity on the rules of the road makes it very difficult. Howard's a lawyer, I'm a lawyer by training. It's very difficult to operate and navigate at this time when you have escalation in tensions and trust, as you trust deficit. What are the rules that we're going to operate under? And I think in this period, the rules are not clear. They're certainly not clear for the semiconductor industry. They're certainly not clear in many ways for the financial industry. They're not clear in many of the sectors that are operating in the China-US space. So we want more clarity. We want more certainty. Neither the US government or China is prepared to do that. China has adopted a number of new rules around data regulation, national security, cyber. And I excuse my voice because I think I might be coming down with COVID, but it's not contagious here today. So what I would say to all of you is there are these realities that we're all confronting, which is a landscape that has become more tense, more uncertain, more unpredictable, less pragmatic, less constructive. And the other dynamic is because of COVID, we're seeing less travel from the United States to China. And that lack of travel creates a challenge of information, disinformation, lack of clarity on that. And not that we can't go to the people on the ground and get that, but they're not having access to the ministers. They're not having access to the government bureaucrats in the way they did 2 years ago. So this is also escalating challenges in the way we navigate. And one thing I can tell you for certain, Gary, is US companies do not want to be squeezed between China and the United States. They want to be operating in China because it's still a growth market for many sectors, but they also want to be in compliance with US laws and regulations, whether it's dealing with the Uyghur Labor Act or whether it's dealing with other issues that are coming up in the US-China relationship. And right now, many companies feel uncertain about the direction of both the Chinese and US government. So I'll stop there and let others respond and add on.
Thank you very much, Myron. Howard, would you, in terms of what you can say about your clients and how they're thinking about these different dichotomies and paradoxes that Myron and I both talked about?
We totally echo what Myron just said. In the reality, we are close to a company operation with some uncertainties. Everybody ran for lawyers to see that any legal support they can get for this, that. Let me give you a couple of stories. For example, China has passed the data security law last year, and we were in litigation in Texas court, right? And suddenly, over so many years, and even the Chinese doesn't like the U.S. part of discovery, but they were complying to the production of those documents, all this, and suddenly that becomes an issue because the technical documents cannot leave China, and even judges in Texas court, no matter what you think of them, they understand there's a problem. If you force those companies to produce documents, and they will be not in compliance with Chinese law. So we ask a company to petition to the government on what should they be doing, and just like Myron said, the uncertainty again. No particular, the local level, the provincial level, the city level, none of those branches of government were ready to tell you how are they going to implement or enforce the new law, right? So it is a retaliatory, you can view this way of legislation against the overall situation. But for the business, that's just cumbersome. I mean, we don't know what to do with it. The other law people talk about, for example, is this anti-U.S. sanction. I mean, basically, it is more targeted as opposed to the data security law. And U.S. defense companies like Raytheon's are in tough spot, right? Because they were right in the middle of this. Myron knows a lot more about that. But that law doesn't affect that many companies because it was really trying to be targeting U.S. companies operating in China. But the other laws that seem to have some meaning, but the lack of the process or certainty to tell people how to operate under them has caused quite a bit of disturbance. So I think that's something's going on, which is part of this uncertainty overall we're talking about as a political climate. Go ahead.
Howard, let me ask you a question, because I've heard this from you and from others where you have Chinese law that somewhat, it's in conflict, somewhat direct, sometimes directly, somewhat, obtusely from U.S. law. Is there any forum where U.S. and Chinese legal experts sit and talk about, all right, well, let's agree that this should be the same, and then there's a Chinese flavor of this and there's a U.S. flavor of that. Is there a forum that either exists or continues to function in that way?
Well, there are different levels of that kind of forum that you're talking about. For example, WTO is one of the forums that try to mediate, right? I mean, for years, Chinese been negotiating, with what type of participation they will be in the WTO. You have heard people are doing some arbitration when there is conflicts, for the business, and that's why, China finally, years ago agreed that if it's not U.S. court order, if it's arbitration result, then it can be enforced in China, right? And you also have heard that Singapore, Hong Kong used to be very popular places for U.S. companies to mediate or arbitrate conflicts. And there are different levels of this kind of thing, but there's no authority who will tell you this body of law, everybody agrees, this body of law, people don't agree. So nothing so black and white like this. But people from business perspective, we can live with that business conflict. The problem right now, I think, is the business is starting to intertwine with the political side of that. And that makes the company, the people feel powerless on how they should be dealing with this. And that is the reality that we may call this a transitional period. But eventually things will be better. But unfortunately, I think this few years, it's going to be very interesting for business.
Thank you very much. Jim, would you like to weigh in here?
Well, I'd like to go back to how we got to where we are today. the foreign business in China, American business in China has done a lot to help China over the years, whether it's building a legal system or myself, 30 years in China through AmCham, myself and many others, year after year, going to Congress, helping China get MFN, helping China get in an agreement on WTO, saying this is a country on a reasonable trajectory. You got to give them a break. Things changed with the global financial crisis. And China came to the conclusion that the power was on their side, that the U.S. was in inexorable decline, and started, we called it reform and closing. Actually, it was reforming for Chinese companies and closing for a lot of foreign companies. There was a lot of cyber hacking. And, I watched the business community year by year get fairly sour on China. And so now where are we today? China's never been nicer to foreign companies and American companies than they are today. Why? Because of the trade war, because of the sanctions. They want to be seen as the good guys, and they want business on their side. So businesses in China are feeling pretty good and doing pretty well. But how long can they trust that to go on? I think that's a big concern. I mean, a friend of mine says there's two kinds of foreign companies in China today: those that need China and those that China needs. And China knows which one of those you are. They know where their leverage is, and you have to be aware of that. I think there's a lot of goodwill among business people dealing with other business people in China. They just don't know where policy is going to go. And now we have, China's now coming to us saying, we have to talk. You have to admit that everything that is going wrong is because of your fault. We even had Xie Feng, the envoy from the foreign ministry, lecture the business people, telling them that they should be lobbying their government on China, anti-China rules and actions, and that you can't sit in China and make money silently. Well, first off, that might make these CEOs subject to the Foreign Agent Registration Act if they actually go do that. So it's a very complicated picture that companies are dealing with. Giving you that rundown, now let me shift gears. You can't not be in China. If you are a leading multinational, you have to be in China. It's 1/3 of global growth, more than the combined Japan, Europe, and America. You have to be there. You've got to survive. So you have to have both eyes open. You have to know that China has some industries where it wants your technology and it wants you to go. In other times, if you can serve what the Chinese government's goals are and do your business. But I think we're going to see a shift. I don't see what is going on today going on forever, because the business bureaucrats in China know that they need foreign companies, they need foreign investment, they need to be connected to the world, because right now they're hurting their company's abilities to go international.
It's interesting. The business community on both sides can't really say what they think to their own leaders, which is an interesting conundrum to find oneself in the middle of. Myron, I wanted to ask you to follow up on one of the comments Jim made, which is it's a good time to be doing business in China, and you're seeing success on a relatively broad basis. Is that what your constituents are basically saying?
Well, since we're the largest business federation, not only in this country, in the world, we have a very large body of companies that we represent. So again, it depends where you sit. Whenever I see Jim McGregor, I'm just reminded when Jim was the AmCham head, and he knows his story. He was coming in as Dow Jones is, opening up Dow Jones, making a big deal in China, and he's walking into Washington to spearhead the effort to help coordinate our outreach to Congress about why we need to continue our work with China in the context of MFN and all these battles. And they're shutting his office down back in Beijing. So even in the 90s, we had these dynamics. I would say, Gary, to you, I think that Jim's underlying point is really important to underscore again. The market is important to U.S. companies. It's a critical market. You cannot avoid doing business in that market. There are companies that feel shut out by it. There are companies that are coming under more pressure. There are companies that are obviously being asked to share their data in ways that are inconsistent with international and U.S. standards. And those are challenges for them with their business model. But most multinational companies feel a need to be in China. And even if they want to diversify their supply chains, they need to be in China for the foreseeable future. At the same time, policies in Washington matter as much to this relationship as the policies coming out of Beijing. There is no question there is going to be a tightening of export controls. There's no question there's going to be a tightening of investment screenings, CFIUS reviews. This impacts the financial industry and many others who are trying to continue to build joint ventures and other kinds of investments in China. And so we're watching that carefully. But the political environment in Washington is such that there is one thing that unites the two parties, and that's China and the threat of competition from China. So what the U.S. policymakers are thinking about is how we enhance our own competitiveness, how we work with our allies to embrace and challenge China's reform model that Jim outlined and Howard has talked about from a legal standpoint. So it's a long way of saying that there's going to be a great deal of pressure on U.S. companies to divest a little bit, to bring back resources here, to invest domestically, and to think about our own national security from the lens of economic competitiveness, which I think puts at risk U.S. engagement over a long time in China, which to me compromises the ability of the two countries to navigate in this new period of time.
I have a follow-up later in terms of what would be a potential substitute for China in terms of the business community. But one thing that we've been reading quite a bit about is what Xi Jinping's been doing to rejuvenate the SOEs. And so you've seen record revenue, record profit. The SASIC assets under management have increased somewhat dramatically. I want Howard to opine on intellectual property issues on this, but just are you seeing, you could cut this both ways. You could have that be a net positive for U.S. firms, since we don't really have steel companies doing business in China, but we have many companies that supply the steel industry. So the stronger the SOEs are, it actually may improve some of the trade and improve some of the domestic businesses for the Deeres, the Caterpillars, and a number of other firms. But have you seen this come up as a particular issue, the rejuvenation of SOEs as it's impacting?
Well, absolutely. And Jim highlighted the change in policy making going on in China in the aftermath of the financial crisis. And frankly, in Xi's rise, the determination to reinvest, so to speak, in the SOE sector. And I think, there are U.S. companies, the energy companies, for example, is one sector that relies heavily on its relationships with SOEs. And they want to sell more natural gas and other things into the market. And frankly, that is key to the phase one deal that has not been fully implemented. So there is no question that there are U.S. sectors of our economy that have to do business with the SOE sector. That said, that is a model of development that is inconsistent with what we view as market philosophies, right? The heavy subsidization of the SOE sector is, in our view, an unfair advantage placed on domestic firms at the expense of a national non-discriminatory market, which U.S. companies can compete and prosper in. So where you sit depends on how you view the SOE sector. For us, heavy subsidization of the SOE sector, non-profitable firms, and frankly, huge market inefficiencies is a component of what China has allowed to develop and grow. And at the same time, we have not seen the United States really effectively deal with China on structural reforms. And one of the reforms that we need to take up with the Europeans and the Japanese and others is a reform of the WTO system as it relates to SOEs and subsidy practices. Can we get there? I don't know, but that's an area of major emphasis.
So Howard, have you seen in your role in the intellectual property world, have you seen a significant development or improvement in the SOE's creation of intellectual property? Because during the time, most of the innovation that I saw in China was really in the private sector. It really didn't touch the SOE world at all. but I've been told that there's even a revitalization of that occurring. And do you have any sense of that?
The question is, how long is the spectrum we're looking at? I think overall for the past, I've been in this business for probably close to 20 years now, since my younger days representing Taiwan companies. I think that definitely the energy to create, invent in the organizations more on the private side, definitely not on the SOE side, the public side. Because Gary, you have to understand that the chairmans or the upper management of SOE have traditionally been appointed by the government or the party, and they won't last long. So no one has a vested interest, like a Morris Chen in TSMC, right? I mean, he is there as a professional management for life. I mean, most chairmen don't have a tenure that long. So talk about intellectual property investment, that's a long-term vision, that's a long-term thing, investments and money in the people. And that nature of SOE has constrained the growth of the inventions, IPs, the team, R&D team, all this.
So that's always the assumption I've made. But when I talked to Myron, listen to what Myron just said. So I wonder, why do we even care what their SOE policy is? Because if that's not going to create the intellectual property, it's going to drive the innovation engine for China in the future. At some point, it's simply becoming less productive. You know, every dollar that an SOE borrows, I think it generates 30 to 40 cents of revenue. So it's a decaying asset, and why do we even bother about it? I'm going to stop.
Gary, it's trying to rebel against the moderator here. Let's talk about SOEs. There's SOEs and then there's SOEs. What you're talking about are the big central SOEs, the big monopoly conglomerates that are very partified. The party runs through them, and they are what they are. But a lot of the SOEs are local, they're provincial, they're even county level. And a lot of these companies are actually very much private companies in an SOA cloak. It was, in the old days, they called it Daihong Maozi. You're running a business and you're worried about the government's going to get you because you've gotten too big as a private business. So they hook up with the government, they put on a red hat. But I've been to SOEs that are world class, factories where you could eat off the floor. They work very well. So we got to be very careful on how we look at these. If they were all big barnacled party run SOEs, why would we want them to reform? We should encourage them to be like that because we can compete against those guys.
That's one perspective, that's for sure.
Well, I want to follow Jim's point. So the SOE that we are talking about, normally we're talking about the larger ones, the gigantic ones directly controlled by the ministry. Lenovo, for example, they started as a SOE, right? Lenovo is a major player in the computer industry, but it started as SOE, then it's privatized, and now today is a purely private company, looks like, right? They're very complicated shareholder structures among all these companies at different levels of the country. But I think Gary is talking about the elephant size SOE, and from my perspective, the innovation engine still remains in the private sector.
One more quick point, Gary. One more quick point. Where we got to look out for SOEs is when they go outside their border, because when they go outside and they're doing business, and they could undercut a bid for a subway system in Norway by 50%, or they can give away equipment. That's where we really have to worry about it, because that then destroys our companies.
That's my concern, Gary and Jim and Howard, which is we're not just talking about competing in China. We are now competing with Chinese firms worldwide.
Yeah.
And so the stakes are different than they were 20 years ago, right? And so we need to understand what that means in terms of both policy coming out of Beijing and Washington, but also Europe. And what I see is, in some ways, Europe moving more towards industrial policies in its approach, its self-reliance, its own tech sovereignty approach. And I see America responding to what they see in Europe and China, and perhaps also the double down on the chips, which I think makes sense, but is a form of industrial policy, and other steps that we are taking. And so the question is, who's pulling who on economic models? So I do have concern about the reach of Chinese enterprises that are being supported, subsidized by the state. And that is, to me, not just about competition in the marketplace, but worldwide competition. And that is the battlefield, not just today, but tomorrow.
Well, that is exactly the example Huawei is, right? Huawei is a private company on paper, but everybody tried to guess who's the real owner, controller of that. When Huawei comes to do business in America, you worry about their pricing, you worry about their capability to sell you huge amount of equipment and systems at a lower price, and that's why all the U.S. telecom players are out, other than Cisco, are basically out. Right.
Right. And there's obviously concerns within our own industry about Huawei. Some want to do business with Huawei and some see it as a threat. So let's be honest, we have inconsistency. This is where paradoxes and contradictions comes back.
That's right.
So let me make a quick comment. So for the broader audience, we'll start moving to questions in about 5 to 7 minutes. So start filling up the Q&A box with things that you'd like the panelists to address. One thing I want to go back to, and we can start. I'll start with you, Howard, since you're now big on my screen since you were the last speaker. So financial services came up in Andy Rothman's panel as an area where the Chinese leadership is still looking for help. Now, I have a very cynical view of this, which is they've never been able to establish trust in their capital markets. I look at analyst reports, a Chinese analyst report compared to a foreign analyst report in a company, and it's night and day. They're not the same thing at all. So to me, there still seems to be a great intellectual gap between how they think of the capital markets and how we have grown up to think of the capital markets. How do you see that?
Oh, absolutely. I'm totally in agreement with you, because I think, again, nothing is happening without reason. If you really examine the leadership of China over the past 50 years, how many of them were trained, educated in Western world in the financial sectors or the financial technologies, or even, very, very few, right? Very, very few. But they always think if we tighten up the political control of that, everything will be fine. So they will only allow, and although they've been expanding this allowance, so to speak, they will only allow certain sectors to be liberated. And that's why you saw, we're talking about SOEs. SOEs were going back, shrinking down, and privatized, but then they have to be grandized again. So it's always a struggle in their mind. How much percentage is the political policy can directly affect on the financial market, and how much portion of the financial market we can give totally to the totally unpoliticized control. So that is a paradox. That is a paradox contradiction in China without American influence. That's already a domestic paradox and a contradiction, right? Mm-hmm. And then layer on top of that, when American companies start operating, taking money back to the United States, that is tough, because that's something they have never really studied and never happened in the country history. There's so much uncertainty about this, what regulation should be in place. It's just very difficult for them. So I think that has been a solution that the government has been wanting to find for the past 30 years. I don't think they have found one. So when they don't have a solution, they just use the big stick of the policy, like now, which is just whacking.
Let me go to Jim for a second, because someone in the chat asked the question, and you made the comment earlier about how China, it's never been a better time, I'm paraphrasing now, better time for U.S. companies to do business in China because they're playing nice. So the question was, how exactly are they playing nice? And are the financial services areas, is that an example of that?
Well, China's playing nice where it needs help. If you look at dual circulation, it's about making China less dependent on the world and making the world more dependent on China strategically. So if you have technology, you've got supply chains, you've got materials, you've got inputs for high-end manufacturing, or even if you have consumer goods that will appeal to their population because they want growth to come out of their own domestic market, because they've felt, with the sanctions and the trade war, that they want to protect themselves. but they're also making some people more dependent on China. And financial services, you're right. They need help. They need to learn wealth management. They need best practices, but they also are very smart about American politics. They know that Wall Street is powerful in Washington, and they want Wall Street in Washington pushing back, saying, don't, back off on China, be nicer to China. And in fact, that's already happening if you read what some of the financial services leaders are saying these days. So, it's all about leverage, Gary. China knows its leverage over companies, and it uses that leverage.
Yes, but can I put a yes, but into this? Yes, Jim is absolutely right that, and Howard is in their underlying themes, but there are three potential areas of decoupling, right? Trade, which I don't think is the most appropriate area for decoupling because there are almost $600 billion of two-way trade. Very hard to decouple that. But the two other areas where the U.S. is seeking some selective financial decoupling in areas like clearly delisting of the stock exchange of Chinese companies, that hurts financial firms directly, right? U.S. financial firms. And there is no question that's where U.S. policymaking is going, despite the so-called influence Jim talked about in Washington of Wall Street. I think right now it's not so high. It wasn't so high during the Trump administration. I'm not so certain it's so high during the Biden administration. And I think that trend line is moving forward. China's contributing to that because they're not making their companies comply with SEC requirements. So there is some selective financial decoupling going on. And the other area where clearly we're seeing it is in the tech space, right? Tech decoupling. So while the Chinese want to acquire our management know-how, they want to acquire our assets and our capital for the short term, and they might want to acquire our technology, there are barriers being put up by the U.S. government that is preventing some of that. And that escalation of tensions, to me, is creating a dynamic within the policymaking circles around Xi, which is what's driving, in part, this self-reliance policy. And even in the area of ag, I think Ling Wei from the Wall Street Journal had a piece out today saying that even in the safe space of agriculture, suddenly they want to produce their own soybeans. They want to protect themselves against the trade wars. Instead of relying on Cargill in the great state of Minnesota to sell them soybeans, they now want to create new farms in China in an area they never thought of as a competitive and threat to their food security. They thought they would always be able to rely on Cargill. So I think the self-reliance policies in China is driving a lot of challenges, but it's the escalation of U.S.-China relations that I think has contributed greatly to accelerate their thinking.
On the food aspect, one thing that's interesting is, we have a good mutual friend who's involved in a company that's one of the largest dairy companies in the world. Their sales have gone through the roof in China. All the high-end products, all the pasteurized Starbucks products. I mean, their business has exploded. And I asked why. He goes, well, they get about a 30 to 40% premium over the equivalent Chinese product because the consumers know where this comes from. So
maybe that's our hope.
So there's still a sense, and this works in the pharmaceutical industry too to some degree, but certainly in food products and agricultural products, there still is this legacy of you can trust a foreign product, especially one that comes from certain firms. You could trust that product more, and so it's an interesting dilemma. I'm going to start looking at questions. Jim, did you want to add anything to what Myron just said?
Well, on financial services, one thing there's all this alarm that pushing back on the Jack Ma and the other tycoons and the internet platforms is, oh my God, they lost $1.5 trillion in market cap. Think about that. Who did that hurt? That hurt Jack Ma and it hurt a bunch of American investors. The Chinese leadership does not care because they know those investors will be back when they smell another profit opportunity. I was around when the stock market started, and I remember they convinced Li Peng to allow some Chinese companies to list overseas by telling them we can get money from foreigners without giving them any control. And so, they're not worried about it. They know that all these funds will be back investing in Chinese stocks if they smell an opportunity. didn't hurt anybody in China other than the tycoons.
So let's kind of shifting the topics to some of the issues that have come up. You've seen Intel get slapped about a bit by the Chinese. You saw Walmart get slapped about by the Chinese. You saw Amazon have to take down a negative review of Xi's book. Some of this stuff borders on silly and some of it gets pretty serious. How does a U.S. firm today think about an obligation to follow U.S. policy? And again, Myron has lots of clients, so we're not looking for names, but specifically, how do firms even think about this? Does this go back to that clarity issue, which is there simply is no one roadmap? So firms are trying to navigate. Do we continue with our sponsorship of the Beijing Olympics? Do we get very aggressive about no products from Xinjiang or no sourcing from Xinjiang? How are firms even thinking about this? And is there a resolution? Is there gravity kind of pulling in a particular direction on this topic?
Well, since Intel's CEO sits on my China advisory board, I'm not going to reference the Intel example specifically. But what I will say to you all is that clearly you have to have strong values as a company. So beginning with, you have to have a value system within the company that allows you to guide through and navigate when you're dealing with different cultures and different rules and regulations, right? You have to have it centered in already existing policy and structure and CSR inside your own company. So if your ethic as a company, and American companies have a high ethic, is that you will not do business in a province that is violating your principles around human rights, then you're going to have to adopt policies and guidelines and business decisions around that. So I think all U.S. companies want to be in compliance with U.S. rules as it relates to, for example, labor practices coming out of Xinjiang. So I don't think there's any conflict there. There is, no question, pressure from the Chinese government in certain ways that sometimes puts U.S. companies in a very difficult, not just U.S., European companies as well, in a very difficult place. But you have to remember where you're headquartered, and you have to remember your principles. And so for most companies, they want to adopt those principles in every market they operate in, and they want to be also a good citizen in the markets they operate in. So that sometimes requires a very delicate balance between their business interests and the compliance that they have to meet with local jurisdictions. So there's no question this has put some companies in a very difficult, awkward position, put some of the banks and financial institutions. It certainly has put a very famous sports league in the United States in a difficult position, and many others. But I think if you stand tall on your principles, and then let that guide you, as well as compliance with local law, that's the best way to go.
So Howard, if I asked you the same question in terms of how you're seeing things, not necessarily from your role at Traurig, but from just your role as a business person, a legal mind in China last 20 years. So first of all, how would you see that? And then does this actually present an opportunity for U.S. firms? Because if you stand up for your values in China, yes, it may be inconvenient for business in China, but won't the rest of the developing countries that you're going to be looking at doing, won't they start to realize that there is a different way, there's a different value system you could actually adopt for doing business? And it doesn't have to be maybe the way that China initially proposed. So when U.S. firms and Chinese firms start competing with each other, how would you think about that?
Well, I grew up in China, so I may have a little bit more. I know Jim lived in there for 30 years. I only lived in China for my first 20 years of my life, right? But yes, it is a different system because it's a system 5,000 years old that's comfortable with dynasties. But once I came to this country, the reason I came to this country, as well as many Chinese came to this country, is because the ethics are different, the systems are different, the value system authority is different than we came here. So-called freedom calls us, right? So when the American company goes back, along with so many Chinese now returning back to China to do business, it is a very challenging, complex issue. It is not simple. Myron's right, you need to be in compliance, you want to be good local citizen, all this, that. But in reality, there's always, at an individual level, you have a mental struggle. At the individual level, the company level, at the group level, you always have this mental struggle. because it's not something you can always reconcile, right? It's not something you can always reconcile. So I want to, and I for this panel, I did a little bit study and I think about this whole thing. I want to push the whole thing back for 200 years, back to 1820s. We are now 2020. Now, around that time, the British, well, first of all, the reason I go back to 1820s because that was our Monroe Doctrine started. America is saying, for the first time, they pushed out the Monroe Doctrine. So I think a lot of those conflicts, that situation really is interesting because at that time, America tried to decouple from Europe. And at the same time, around 1820s, the Brits and the France were in their own set of trouble. And so America was able to push out the Monroe Doctrine and say, okay, leave me alone. The whole Americas, they were little countries are getting their independence, and I am the big power here. Leave me alone, decouple. I think there's a historical coincidence here that China rising in the past 30 years with everybody's help. But they get to this point, they feel comfortable. They don't call it the Monroe Doctrine, but they don't want decoupling 100% because of global markets. But is ethics enough to make everybody to call decoupling? I think the conclusion is clear. The ethics alone does not make the U.S. company or China company to decouple from each other. I think that conclusion is clear. So, but what's left for the Monroe Doctrine or the modern day Monroe Doctrine for U.S. and China is the question for Americans, which is, what are you doing in Asia today and what do you want to get from Asia? And the question for Chinese is, since 1945, America has redefining the landscape of Asia. And as China rises, what do you want to get? And what do you want American to do in Asia? And I think it sounds like a policy issue, but don't forget the policy and the business are intertwined together. Again, 1820s, East India Company occupied Singapore and turned Singapore into a modern day Venice. And that was a base to start doing opium trading with China. Only 20 years after Singapore occupation by East India Company, the opium war started. So everybody hopes there's no war. Everybody hopes it's going to be peace going forward from here. Something will be always reconciled. But I think the business concern has to be addressed under the Monroe Doctrine or the modern day Monroe Doctrine, or modified. Which one gets what? And Singapore is an example. Singapore has been a very Western-friendly company. No one feels uncomfortable doing business in Singapore. However, Lee Kuan Yew and his family are dictators. There's no American-style democracy in Singapore anytime, but it has survived and is still being good today, right? But how long that system can survive after Lee Kuan Yew's son, the current prime minister, who knows? So there are a lot of books out there talking about the democracy, the future of democracy, all this stuff. I think what's interesting is that both countries have to define what they want and what can they get.
So can I go back to Howard, the beginning of Howard's comments about business?
30 seconds.
Because this is an important point. He's talking about different viewpoints. Right now, for American companies in China, they're losing touch with their headquarters because it used to be that it was a difference on opportunities and risks. Now it's getting ideological and it's getting ethical. And so, and with businesses not being able to go there and spend quiet time with their managers there, the companies have to make up for that. They've got to start communicating very closely, and they also have to respect the viewpoints of their Chinese managers in China who think very differently. They look at Xinjiang differently, they look at Hong Kong differently, they look at Taiwan differently, and you've got to validate their viewpoint, and you've got to understand each other, because there's a divide happening now, and I see it in company after company. It's very worrisome.
Yeah, Jim,
well,
I think
also Gary, it's
Myron,
also shareholders and it's also employees that also are shaping the views of corporate management today differently than they were 20 years ago.
Well, and I think that going back to that, someone asked the question in the chat is, why are U.S. firms, is the U.S. actually becoming more like China, where the companies have a harder time actually communicating and standing up to the leadership? And I think you guys have both addressed, some of that. One thing I want to challenge for about 5 minutes, and then there'll be one or two shorter questions at the end. Do you really need China? So we have an Asia Society China event in the middle of the Asia Society context of an Asia Society, not a China Society. And I always reflect on the fact that China, American business or business in general has had a great 30-year run doing business with China. Does the next 30 years look as attractive as the last 30 years? And is it time to look at ASEAN, look at India, look at Africa, look at the South? Is it time to actually say, if we have to compromise this much, it's not worth doing? And I think that those bright lines are starting to get drawn. Everyone gets to decide for themselves. And I personally don't really judge that. I think people, companies, et cetera, get to decide for themselves. But are we starting to reach that point where not only is the developing market outside of China getting substantial enough to be a peer or to start to be an alternative, and are we being pushed enough to where you actually really have to have that conversation? Myron, do you want to go first?
Well, look, we work all over the world. There are a lot of markets around the world that are attractive, but China is still the big gorilla on the block. It is still the big growth market that Jim outlined. It doesn't mean that Europe's not important. It doesn't mean that Southeast Asia doesn't take on a bigger role. It doesn't mean that we don't look at markets elsewhere. But China is still a critical part of any boardroom discussion about growth. It just is. That's point one. Point two is that, I don't know where 30 years from now we'll be. We don't know what's going to happen after Xi leaves government. And I would say the next 10 years, there'll be some rough segments in U.S. China policy. But I think the next 10 years, if you're looking out, you have to bet on China, even if it has sluggish growth, even if the growth is not as robust as we'd like to see it. As the pie gets bigger in China, U.S. firms are going to want a piece of that pie. And China's pie is getting bigger. May not be getting bigger in every sector for U.S. firms, but it's getting bigger. So I think that you have to continue to invest in China. You have to be smart and diversify where you can. Certainly your supply chains, you have to provide yourself with backup plans, and you have to look at alternative markets. But I could also critique markets around the world that are struggling themselves.
All right, Jim, do you want to jump in there for a sec?
Well, we've been talking about decoupling and recoupling. It's about de-risking, right? Companies that had too many eggs in the China basket when the trade war started had a lot of problems, and a lot of them have diversified and moved out. You look at ASEAN. I mean, if you look at the population of ASEAN, you look at the growth of ASEAN, it's fairly comparable to China as a collective unit. And you say, oh, no, but that's a whole lot of different governments to deal with and a lot of headaches. Well, guess what? Try doing business in China where every province has its own rules and every city's got its own rules. You're dealing with that already. People have to look, I think they got to de-risk and look to the future. And let me just say one positive thing here, Gary. Damien Ma from the Pulse Institute just put a very interesting report out. And he's looking at the changeover in the central committee of the party at the end of the year in this Congress because of the age 60. If you're 68, you're out. There's going to be about a 65% turnover. And it's going to be people now that come in are people from the 60s. So you're going to have people that grew up under Deng Xiaoping and Reform who are going to make up the biggest part of the central committee. The Politburo of 25 people still is going to be the guys from the 50s who lived through the worst of Mao. So there is hope in people moving up through the system. It's not going to happen tomorrow. So what we're seeing in China today may not be forever.
Interesting. Howard?
I totally echo what Jim said. I think instead of business has to change something, I think both government needs to change a little bit. I mean, at this moment, the Chinese are not totally shunning U.S. out. And the U.S. have done during the Trump administration, they've done enough. I think we may have, from a U.S. perspective, in exchange for business interest, we may have to yield a little bit. In exchange for protecting Taiwan for the American interests, we may have to yield on something else. So we can't fight on everything, right? It's like litigation. You can't fight every little thing. You have to pick and choose your real fight. Sometimes you're going to lose on this, but you just have to let go. So I think the government have to yield first, both of them, to make this whole global situation better.
I think that's optimism. That's optimism.
So Myron,
There's a lot of muscular policy being developed in both Beijing and Washington for the foreseeable future.
Myron, 30 seconds on, are most U.S. firms behind the different trade organizations that we're talking about? Do they view those, do they generally universally say, hey, more different trade organizations would be good for us?
If you're talking about what, the WTO and organizations like that, or what are you talking about in that context?
The whole Trans-Pacific Partnership, the regional
well,
trade
look, I just spent the week beating up Jake Sullivan and Catherine, I shouldn't say this in a public forum, about where the hell is our trade agenda? We need a trade agenda. We have nothing forward-leaning. We need a counterweight to China through the Indo-Pacific Initiative. Why aren't we part of TPP? Why aren't we pursuing free trade agreements with the UK and other countries that want to do business with us? So if you want me to go off on that tangent, I would simply say, you cannot lead from the back. America needs to lead from the front. And right now, we are not showing leadership when it comes to our trade agenda. And by the way, RCEP just got done. We're not a party to it. TPP, all these countries are saying, where's U.S. leadership? So absolutely, if you want to counter China, you can't knock down the barriers directly. You have to confront China by building alliances around the world. And one way you do that is through trade pacts. And we ought to be doing something in the digital space, for example. We ought to be doing something to rejoin TPP. Don't get me started. I've been going off for the next hour.
Now I have to stop the train. That was great. Jim, so there was one question in the chat box that's totally unfair to ask you, but I'll ask you, what's the future of Hong Kong? Does Hong Kong have any future as a real financial hub, or is that pretty much done?
I look at Hong Kong as the only Chinese city whose best days are behind it.
Wow. Okay, so that I think means that it doesn't have as much of a future as we might have thought in terms of a financial hub.
It has a Chinese future. It's going to be a Chinese city, and it's going to have the opacity and controls that keep the capital markets in China from working very well.
And you got Shanghai and Shenzhen as competitors, right?
Well, don't forget Beijing has its own stock exchange too, just because every national capital should have its own stock exchange. Let me stop here. I have one comment to make, and one of the takeaways for me for the entire day has been, it's been reassuring. We're not spending a lot of time talking about changing China. What we're doing is spending a lot of time talking about what we need to do to actually be more competitive and the kind of strategies that we need to do to be more competitive both within China and then in regional areas outside. And I think that's quite refreshing compared to the discussions of a couple of years ago, which were all about how do you stop or constrain China, which I always thought was a somewhat counterproductive exercise. I always viewed it as, since we're talking about football season, I never thought it was a winning strategy to go ask the coach of the other team to accommodate our weaknesses before kickoff. And, we now find ourselves in the middle of a game, and I think it's probably not even, it's certainly not going to be a productive exercise to do that. So it's good to see everyone focused on what the U.S. needs to be doing. So with that, I've lost track of time. I think we have a couple minutes left, but I'm going to see if Margaret wants to step in and guide us to the next session.
Thank you very much. Our thanks to Gary, Myron, Howard, and James. Gary, you did a good job of reining in that group. We'll see you back here for closing remarks. Myron was talking about Ling Ling Wei's piece out today in the Wall Street Journal. She's joining us as a speaker in our final session, so stay tuned for that. Thank you again to our sponsors, Lisa Berry, Blackstone, Asia Alternatives, Race Capital, Dobkin Family Foundation, Silicon Valley Bank, Fantan Smith, and many more. We now have a short 20-minute break. We'll see you back here on this same Zoom link at 3:20 Pacific.